Hi, I'm Paul Moore with BiggerPockets.com. I'm a commercial real estate investor, and I love the tax savings of real estate investing. I'm not a tax professional, and I don't play one on TV, but I am going to tell you 10 tax saving tips that real estate investors enjoy. Number 1, hire a tax strategist. I talk about it on another video. It's important that your CPA doesn't just fill out your tax returns, but you actually have a tax strategist to help you arrange your affairs to be sure you're minimizing your taxes, maximizing your income and wealth. A tax strategist or a CPA who knows this stuff and cares enough to help you set things up right will help you and save you hundreds of thousands of dollars a year sometimes. My friend Ed is saving $120,000 a year in taxes just by rearranging his affairs ethically using the tax law that he learned from a tax strategist. Number 2, be a direct investor in real estate. Now, a direct investor means that you're going to get a K1. That means you're going to be able to maximize your write-offs, your depreciation. You're not just getting a 1099 from a company who invests in real estate, you're getting a K1. Whether you're getting that through an LLC or an S-Corp or a fund like ours, this K1 allows you to maximize your deductions and maximize your income. Number 3, use cost segregation studies to accelerate your depreciation. Now, a typical commercial property has a 39-year straight line depreciation life cycle. And a residential property like multifamily has a 27.5-year life cycle. But using a cost segregation study, you can write off certain things like flooring, lighting, cabinets, countertops, roofs, etc. in a much shorter time frame. And the new tax law makes it even better. Number 4, correctly classify deductible expenses. Now, you may have a bookkeeper who just capitalizes all of your expenses and doesn't realize that a lot of those can be expensed all in the same year, maximizing your write-offs. Make sure you get involved and make sure you correctly classify these deductions. Number 5, consider returning capital to you and your investors rather than distributing income. Return of capital obviously doesn't have any tax effect because it's just returning the money that you put into the project. And by timing the return of capital versus the distributable income, you may be able to increase your deductions. Number 6, refinance tax-free and reinvest the proceeds. Now think about it. If you have a home and you refinance the home, those proceeds aren't taxable. Well, it's the same with commercial or other rental real estate. If you refinance, you can take those proceeds, you can reinvest them somewhere else, and there's no tax on that. This is a great strategy to maximize your income and grow your wealth. Number 7, learn to use the 1031 tax deferred exchange. Now, you probably know about this. The 1031 exchange was almost lost in the new Tax Reform Act, but it was preserved for real estate investors. This means you can exchange a property for a like-kind property and defer capital gains tax. There's also a little known or lesser known law called the 721. That's a 721 tax deferred exchange. You can learn more about that from your CPA or from BiggerPockets. Number 8, avoid passive loss limitations. How? By becoming a qualified real estate professional. If you spend at least half your time, 750 hours per more, on real estate investing or real estate activities, you may qualify as a qualified real estate professional. And this will allow you to maximize your passive losses in the current year rather than carrying those losses forward as a lot of passive investors have to do. Number 9, use self-directed IRAs, self-directed Roth IRAs, solo 401ks, and maybe even whole life policies. These are amazing tools that allow you to operate and gain income tax-free, and sometimes you'll never have to pay taxes on some of that income. So go learn everything you can about self-directed Roth IRA and solo 401ks. Number 10, reset basis at death. Now, you may have kicked the can down the road with 1031 or 721 exchanges for years, and you may be faced with a huge capital gain. Well, if you pass the real estate to your heirs at your death, they may be able to reset the basis in that. And if they do, they may have zero capital gains tax. This is a powerful strategy that a lot of real estate investors use to grow their wealth over many generations. You might have noticed that the Forbes 400 almost all invest in commercial real estate. This is one of the reasons, because of this reset basis at death. Now, we were happily surprised with the new tax law that came out in December 17, and there were a lot of wonderful bonuses for real estate investors. Number one, I already mentioned, the 1031 exchange was preserved. It wasn't preserved if you had trucks and cars and airplanes, artwork, patents, and other things that you were exchanging, but it was preserved for real estate. That was a wonderful surprise. Number two, there's a 20% pass-through deduction to certain income. That means if you qualify, you can reduce your taxable income by up to 20%, and this pass-through income savings can save you a lot of money. Number three, temporary bonus depreciation. Now, this bonus depreciation allows some items that were generally depreciable over 5, 15, or even more years to be depreciated all in the same year. Now, here's a real example from my CPA. He has a guy who bought a fourplex for $250,000. Now, if he just did a straight line depreciation on that over 27 and a half years, he would have depreciated about $4,900 per year, and that would have been a write-off against his taxable income. But under bonus depreciation, he was able to do a cost segregation study, which I mentioned earlier, and he was able to write off $54,000 in 1 year. Now, this saved him $49,000 in depreciation. At the 37% tax bracket, he was able to save $18,000 on his taxes in year one. This is powerful stuff. You can see why the Forbes 400 and a lot of other people, including my company, Wellings Capital, loves commercial real estate investing. And I think you will too. You know what else I love? I love BiggerPockets, because BiggerPockets is the world's #1 community of real estate investors. We're over 1 million strong. We'll help you find tips, strategies, tactics, financing, deals. We'll connect you together with other like-minded investors. And whether you want to just invest passively and make some more money on the side, or quit your job and invest in real estate full-time, BiggerPockets is your resource to find your real estate investing success. I'm Paul Moore with BiggerPockets.com. Happy investing.